Okay, we're looking at TNA. That sounds kind of funny. It sounds like when I was in high school watching Charlie's Angels. But anyway, humor aside, we're looking at TNA Direction Small Cap Bull 3X shares. And this is being brought to you by oldschoolcharts.com. And oldschoolcharts.com is all about using kind of old school traditional methods, trend lines, chart patterns, things that your dad and granddad probably used when they traded stocks. But these folks back then, they had long attention spans, and they could study this stuff and really get a lot of meat out of these charts. And to ignore what they did back then today, I think is a mistake. Visit the website. I've got some more charts there. I've also got a little explanation on why I believe this is a really good method for determining or at least bettering your odds of market direction. Okay, let's get rid of that. As always, you trade financial instruments at your own risk. I'm not a professional investment counselor, broker, or have any accreditation for anything. I'm just a guy who draws lines on charts, and I've had pretty good success at doing it. So you be the judge. Anyway, this is TNA. This is a long-term chart. You see, I have drawn a channel, a trend channel that broke after the first reaction to the flash crash. This line did give way, and ever since it traded down, but it appears to be now in a rally. So I want to try to understand, well, what's gonna happen next? Well, the first thing I want to let you know is that I'm not ignoring this low down here in March, just totally ignoring it. I believe that's still going to have technical significance, but I don't think that any channel that develops out of this that is short-term or mid-term is trustworthy, because this is such a low point and the ascent out of here so steep. There is simply no way that trajectory or that angle of ascent can be maintained over time. It's just impossible. So what I usually do, and I've had pretty good success since this low, is find the next major dip, then begin to look for a trend to develop. And it looks like this has happened with back in July of '09, coming up here, making a little something of a double top, not quite fulfilling that, not quite getting down as low as one would expect from that pattern. Then another touch, coming back to the top, support, up, break, and now some sideways action. I kind of have the feeling and have thought for a while that the pattern that we traded down out of this channel on looked to be a consolidation slash correction. You could even say that when we look back at this chart in a longer time frame, maybe 2 years from now, it's quite possible that we look back and we see this, what we thought was just a terrible event. Gosh, I'm losing everything. We may look back at this and it just looks like a little bull flag. I'm not telling you that's for sure going to happen, but in the grand scheme of things, that may be just what we see it as. So anyway, let's that aside. Once we broke out of this nicely, came back for a back test, and now it looks like we're up again. What I want to do now is look at a 30-minute chart, because this is kind of fun. I'm going to draw a trend line. Let's start here. I believe that works pretty nicely. We got 3 touches on that bottom line, and the tops are running a little ragged. By the way, that's not unusual for a bull market. In a bull market, the bottoms should line up nicely, but the tops can run ragged. In a bear market, the tops line up nicely, but the bottom can run ragged. If you look at the bear market that we experienced, the last one that we broke out of a year and a half ago, you'll see that was the case there too. But what I want to show you real quick here is the idea that broken resistance later turns into support. I'm going to draw some trend lines. We got a tall candle here that's a shadow, and you can see that broke and didn't quite make a full back test, but pretty close to it. Let's look at these two peaks. This is interesting because they point up. Broke, support. Matter of fact, that support hadn't broken yet. Let's look at these two. I've got to learn how to draw these lines a little better because this actually works perfectly. There we go. Broke this line. Boom, boom, boom. Test, test, up. Still hadn't broken. Look at this line. Same thing. Basically the same thing. Had a little dip below there. Here. Didn't quite make it, but same idea. So what I'm looking at here, I'm just seeing that as these levels of resistance give way, it's almost like the prices ratchet up. Like once they get over that, they can't get back down. They just keep jumping up one level to the next. The question, of course, is how long will this go? And I do not know the answer to that. However, we can get an idea if we back out to a 2-hour chart. That looks like a bunch of hairpins. And if we draw another line across here, that kind of correlates to what's been going on in the indexes in the way of what looks to be an inverted head and shoulders. This got down a little bit lower than the right shoulder did in the indexes. But anyway, I've got the general idea in my head from looking at this chart and also from looking at the indexes that that this is going to run into the low 60s before we see anything major happen. Well, let me take it back. When I say major, it's going to run into the 60s before this line breaks. We could run up, come back for a little consolidation, and then head up for the 60s. But I think it's pretty much. I'm pretty satisfied that it's in the cards that we head up for the 60s, and we may even go up for a full back test of this line in the what would be at that point in the high 60s. So anyway, good trading to you. Again, you do this at your own risk. Don't take my word for it. Use your own chart, draw your own lines, but most importantly, draw your own conclusions. Visit the website and take care.